Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, Luke Tilley is back with us. He is the chief economist over at Wilmington Trust with his 2020 outlook, the market tug of war, productivity, populism, and portfolios. And there certainly has been no shortage of news to kick off 2020. It has been a crazy news cycle. And part of that is productivity and some of the economic data that we're seeing. And it's not necessarily being reflected, the growth in that economic data.
Yeah, that's entirely true. But this is a continuation of something that we were talking about last year. Last year we talked about the fourth industrial revolution and all of these technologies that companies are adopting. Big data, robotics, artificial intelligence, all kinds of things. And really the way that that plays into markets and the economy is it extends the cycle. So as we start the year here, we've gotten more positive about equities and about risk assets. And it's mostly because we see that productivity playing out with individual companies. It's not really showing up as much in the data, but that's because productivity is an incredibly hard thing to measure. And that happens. It's a hard thing to measure anyway. It's really hard when the economy and when firms are changing very quickly. We actually experienced this in the late 1990s. The government mismeasured and underestimated the amount of productivity that was going on there in a very similar environment. We think that that's going on today. We actually think productivity is higher and that it's going to continue moving higher over this cycle.
All right, what about political and economic populism? You just can't escape talking about that.
Right, so the title of our outlook for this year is the tug of war, because we really view both the economy and markets as that tug of war between productivity that I was just describing, but also populism. So populism has really become quite mainstream, whereas maybe a few years ago in the previous election cycle, ideas like universal health care or a $15 minimum wage may have seemed like a fringe idea, and now it's basically required of a lot of the Democratic candidates on the left. So what we see is not just populism in the US, but we see it worldwide. And it's actually somewhat ironically a result of that productivity we're talking about. With the growth in productivity, you've got more and more of the gains from economic growth going to capital and not to labor. And I think another thing about populism that's important is it's not just one side of the aisle. On the left, you do have some of the populist measures that I was talking about, which could come to fruition if you have a winner from the Democratic side. But even on the right, when you get protectionism and when you get trade, all of those kind of things, then you could have populism from the right as well. And then just to top it off, there's sort of bipartisan ideas about populist policies, whether it's breaking up of large tech companies, things like that. So it's really stands the chance to affect markets.
It's really interesting how you describe populism on both sides of the aisle, because when you think of populism, you think the right. When you think of populism the way you described it on the left, that sounds more like socialism. So it sounds like they're interlacing both of these words, and they're talking about very different concepts.
They're very different concepts, but what we're really thinking about is what are the types of policies that could end up upending the recovery as we see it now. Productivity is really driving the economy forward, but populist policies from either side could end up spooking markets. On the left, it could be tax hikes, it could be that minimum wage, it could be increased regulation, and on the right, any kind of increased trade barriers, protectionism, trying to bring jobs back to this country as opposed to what has historically been policies of the right, which is sort of more of a global free market view.
Yeah, I mean, that's a really interesting way to look at it. So we've discussed productivity versus populism. What about monetary policy versus trade policy? Yeah,
so right now we think the most obvious tug of war that's going on, sort of the manifestation of these two things, is monetary policy as a result of productivity against sort of some of these populist policies which have come about in terms of the trade war. Monetary policy we don't see as upending the cycle or markets because due to the strength of productivity, it's keeping prices low, it's keeping inflation low, and the Fed has been able to lower rates. And they can do that even though we're so late in the cycle, so long as we don't see any kind of inflation. We think that that's likely to continue this year. However, some of the populist policies up until, of course, about a month ago, trade and tariffs were one of those populist policies that threatened to upend the recovery. It seems like it's abated for now. We're going to get this new trade deal signed, hopefully, but that doesn't mean that it goes away entirely. We still think of that as a big risk as we go through the first 6 months of this year.
Yeah, it's quite impressive how the markets have remained in risk-on mode despite trade policy, which is, like you said, largely has been removed, but even geopolitics over the past week.
Yeah, geopolitics over the past week have certainly set markets back a little bit, but if you go back to where we really started seeing the strength, it was right around October 15th where we were supposed to get some new tariffs put on, and then December 15th again, when markets started seeing that we weren't going to get those tariffs and some of those populist policies, that's where we started seeing the gains in markets. So if we continue to see those types of results and that it's not going to upend markets, then we see the strength in markets. Of course, this week's international and geopolitical events could upend things, but the developments from today are positive.
All right, thank you, Luke, so much for joining us at MarketSite, and thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.